Everyone talks about growth. Everyone talks about value. But the best investors know the real money is made in between. This is the art of GARP, growth at a reasonable price. In this video, I'll show you 5 stocks that are still undervalued, still growing, and still quietly building wealth for long-term investors. GARP investing means you don't chase the hottest momentum names, and you don't hide in boring value traps. You look for companies with strong earnings growth, solid balance sheets, and reasonable valuations, usually a PEG ratio below 1.5. It's the strategy pioneered by Peter Lynch and still used today by fund managers who want both growth and safety. Number 5. Adobe, ADBE. Adobe is still the king of creative software. While AI startups try to disrupt design tools, Adobe has quietly built its own AI engine called Firefly, integrating it across Photoshop and Premiere. Earnings per share are growing around 14% per year, and the forward PE is below 25, reasonable for a company with such a moat. Number 4. Alphabet, GOOGL. Alphabet is no longer just Google search. It's AI, cloud, and autonomous vehicles through Waymo. Revenue is still growing at a double-digit rate, and the PE around 23 makes it cheaper than many peers in tech. This is the perfect GARP stock, a market leader that still trades at a reasonable multiple. Number 3. Taiwan Semiconductor, TSM. TSM is the backbone of the global chip industry. Every AI revolution, every smartphone, every data center depends on its technology. With gross margins above 50% and a forward PE of just 20, this is one of the most undervalued growth machines in the world. And when AI demand explodes again in 2026, TSM will be right at the center of it. Number 2. United Health Group, UNH. Healthcare rarely gets attention, but it's one of the best GARP sectors you can own. United Health has grown earnings consistently for 15 years straight. Even with rising medical costs, their insurance and data segments keep profits strong. Forward PE around 20, dividend yield 1.5%. Steady growth at a fair price. Number 1, Microsoft, MSFT, the ultimate GARP stock. It's a tech giant, yet it acts like a compounder. Cloud revenues still growing over 20%, AI integrations in every product line, and a strong balance sheet with over $70 billion in cash. P/E around 28 for a company this dominant is still reasonable, especially if you're thinking long-term. These aren't the flashy meme stocks you see on social media. They're the quiet compounders that build real wealth over time. Growth at a reasonable price. That's how legends invest. This is JP Finance, where we look beyond the hype and find the truth in the numbers. Subscribe for more financial insight.